Yo, what's up, guys? So somebody wanted a clear video of how I explain this, my approach on this pair, the fundamental approach, of course. So this was last week. So this trade, I'll go to the weekly time frame where like you do your everything there. So what I was expecting here. So we'll do this. Let me see. We will look at the fundamental first. So here we're going to look at the COT report first. So where is it? It's a minute. So you can see here we have we're looking at the COT retail net position. This red line here, these are the way the retailers are positioning themselves in the market. And guys, you can go to the CFTC if you want to look for information. You can go there, then you'll find it. We know that every time we study the behavior of the retailers when they're extremely bearish, that's when you expect some bullish move to the upside. Example like here, where like we got this bottom here, price went higher. Again, there's this bottom, you can see price went higher. This bottom here, price went higher. And there's this bottom here, price went higher. And there's this bottom as well, price you can see went to the upside. Okay. Yeah, so looking at this, we can see here we are getting more bearish here. We are pushing the downside, of which expect the market to go up. So looking at the behavior of retailers here, this tells me something that I'm expecting crude oil to go up. And as well, I can look at, I can bring in the commercials. You can see, show you first. These are the hedge funds. You can see we are now, the price looks a little bit bearish, but when you look at this, what you get to see here, that we are now diverging. This means that the commercials are abandoning their bearish move and you're likely not to start pushing higher. So once I have that, I'll bring in the what we call the commercials themselves here. You can see what we are doing here. So like we are extremely pushing to the upside, as you can see, according to commercials. Let me zoom in a little bit. Need to zoom in a little bit more here. Commercials are getting more bullish, and as much as the price looks bearish there, I'm still expecting a bullish move. And from this, can now compare this one with our index to see how bullish we are. So here we can see when we bring in our index, we can be able to see how bullish commercials are. Like we are very, very bullish. This is 92% long. So look at this. As much as price looks bearish, we expect the market to go a little bit higher. You can see this happened like that. The last time we were bullish, there's a time we were bullish. You can see commercials and the price gave you that big move to the upside here as well. You can see, look at the COT report here. We were bullish and also the commercials were bullish. Up there, you can see the market also gave you bigger move to the upside there. So going through this, look at this here. When you were bullish way back, let me change this line to blue. Is it blue? Okay, I don't know. Yeah, I can't change it. Let me just leave it there. We can see here, we were like that, extremely bullish. The price went higher. So looking at those three things, we expect some bullish moves. So from that point of view, so can say that what the COT, we expect price to go up. Now, here, price is at break even. We are not break even, but you can look at other factors. like the valuation of the market here, valuation of the market. And here we're going to look at the value of the market versus the dollar and gold, and also the look, our analysis are done on futures. So we have to look at the valuation as well, and let's see what we get to see. So when you bring in our valuation information, you get to see that here we are almost undervalued, because when below that red line you are undervalued. And what happens every time you are undervalued, we'll get a move to the upside. Let me show you the last time we were undervalued versus the dollar against crude oil here. We were undervalued. You can see what happened. The market went up. How many percent? It went up to around 19% up. That's 20% up. Look back here, we were undervalued against the dollar. And you can see again, went up. That is around 15%. So looking at the valuation, even here, we're undervalued. Right here, you can see some green candles. Price took some time, but again, 3 consecutive days, we were very bullish there. So looking at the valuation information here, again, you can see we're undervalued versus the dollar against crude oil, and we went up. So this here, this just the dollar. When we're looking at the DXY here, that's why you see just measuring the value of it. So looking at the valuation, where the price is as for now, let's do this very quick. This is where we are right now. We can bring in the other valuation tools like gold and all of them. You can see when you mark all of them, every time we are coming from undervaluation, we'll get the move to the upside. And we can only get a sell if this valuation will be on this other end. So this means that we still have the buying idea with us here. You can see here when you're undervalued, here we see the price went up here. Again, the last time we were undervalued was the treasury bonds, gold futures, and what is this? The dollar, right? This is what I'm saying here. This gold futures, this is the interest rates there, and the number one is just the dollar that you're used to. So the moment you are undervalued against what you're trading, most of the time, price will do what? Will go up, like what happened here. We are undervalued. See, price went up. We undervalued, price went up. And here it was again undervalued. You can see price went up a couple of maybe 2-3 days and went down here. So you can see we are undervalued here. And you're looking at just the value of the market in the last 10 days. And you can as well look at it for a whole month. Just measure the value of crude oil and want to see is it cheap to buy. And you can see right here, it's very cheap, just coming from undervaluation versus the three valuation tools here, and expect the move to the upside. Let me show you every time we were undervalued versus the 3 of them. Here we are undervalued and we got that move to the upside. Here we undervalued and we got that move to the upside. Here we undervalued and we got that move, you can see, to the upside. So been just putting their lines to show you when you get undervalued, like here, see, price went up. Even here, undervalued, price went up, repeated twice. And lastly, I don't want to go much to the back. And here, and you can see, this is what used to happen. So being undervalued here, for me, fundamentally, I think it's enough for me to keep staying this trade. This is the second week. I'm not getting out, so staying in with a reason. So that's just from fundamental, like valuation point of view. And you can see the seasonality focus. And when you look at this, let me talk of seasonality. This is where the current price is. And you can see we still have some bullish focus there to go up to around 11th of April, who knows? Price can consolidate until then. So price can go up. This is just like our expectation. And whatever is remaining was done technically. So having that idea, the reason the trade is in that position is because that was just like the fundamental bias, because you can see price will turn when you don't expect. When you think that, okay, this one is a very strong sell, right? When you're like, this one is a very strong sell, you don't want to buy, you want to follow the trend, that's when the market will make a move against you and you might not be aware. So try to make sure that the fundamental bias, I have it before the technicals idea. So technically, I think I had my idea on this 4 hour. If I just get rid of what I have here. And see, when I got that market, the market had gone up, and this is the zone that had been left here. So what I did, I just identified a base, this zone, because we only had this one green candle. This is the only green candle that was there when I was looking at this market, and noticing that this area has been, prices left a drop. This is the base and the rally to the upside. This was a very good imbalance zone. So I mark the low here. There's the low, and my demand now was from that zone to here, right? This was my entire demand. That was my entire demand. Now on that demand, can call it demand. That was my entire demand, you can see. So that demand and my stop loss is always just like this, how I measure my stop loss. I'll mark the entire zone like that, and I'll just move the same zone down like this, here. So my stop loss is supposed to be here, there. So, and I just let the zone run. So you can see what has been happening. The market has been, went up, came in the zone, went up, went deeper, went up. Like this is what has been happening. And right now we're kind of trying to move away from the zone. And here, if you're someone who used to trade the patterns, reversal patterns, you know what you're seeing around this here. You can see those rejection there. And those who trade patterns, they can see like this one can be the left shoulder, this is the head, the right shoulder, and the price has been coming here and we are failing to break the neckline. Those are just reversal patterns there. But let's see what will happen on this crude oil. We'll keep holding our position. So this is a crude oil future. So on my broker, I trade use oil. It's called the use oil here. And this is what you can see, the same trade that we have there. We're still holding the second week. Let's see how this week will end. Otherwise, guys, drop your comment, your views about crude oil, and let's see what will happen about it. Otherwise, I'll see you in my next video.